today. Welcome to the new people and the new names. Very glad to have you here, guys. So, how was the week? The Friday question. Good morning. I see. All right, that's good. Yeah, I'm also looking for anywhere between 5 to 20%, let's say, per month, depending on the market conditions. Of course, when we put it down to weekly summaries, it could be a big range of numbers. So some weeks will be losers, some weeks will be very good profits, but that's why we more or less measure the overall performance, at least on a monthly basis, because otherwise it's too micro analysis, if we can say it this way, right? Stopped out UJ. It happens. It was only aggressive, so that's why we always use less risk, right? I also had a few losers this week, but mainly, again, the setups which I forced. So again, conservative, always much better than the aggressive ones. But again, let's check out Aussie dollar, for example, right? The aggressive they're paid. So as long as the risk reward is in place, we should be fine. Small positions, exactly. Tiny risk. When you know it's not going good and it's not perfect setup, apply less risk. Okay, guys, so let's go ahead and summarize what we did during the week, which setups worked, what we were looking for, and so on. Let's cover FTSE first of all, and then we go back to Forex. Well, the idea here, as we were talking yesterday, is that we have this cycle previously, lower lows started being created, the cycle was completed right here, and then we saw a pullback towards the 50%. Okay, Fibonacci retracement. This is where we said, all right, let's look for possible continuation to the downside. Now, this is also aggressive setup for one reason only. The actual ABCD wave on the daily chart was not broken, right? The trend line here. What we do have, and again, repeating, this is an aggressive setup, is the 4-hour chart, where we had divergences, false breaks, and now we got the convergence creating lower lows. This is where we say, all right, after the 5-leg structure, we can look for pullbacks and possible continuations to the downside. That zone right here looks like a pretty good zone for us to go ahead and look for these sells. And if we drop the Fibo there and combine it with the actual price action, we can see that this is precisely 50 up to 61 Fibonacci retracement, right? That level. And we're going closer to this. Hidden divergence already, possible hidden divergence, of course, started forming. So on the lower time frames, what we would like to see is some kind of divergence confirming the higher time frame convergence, and then we can start looking for the sells. Now, why would I go ahead and look for this confirmation and not just place there a pending order? Because, first of all, indices, it's much more aggressive to look for sells, okay? Why is that? Because you're betting against the economy. That's the whole reason. And currently, the economies are booming. We're in a bullish market. So all these suggestions that we have for the sells should be very, very carefully played. Furthermore, again, we don't have the breakout here, so there are no guarantees we're not going to see something like that if we get a push down at all. So that would be the level where I will be cashing out for sure, at least partially, and moving my stop loss to break even. if we get a sell setup, of course. And if we get the breakout, well, then we can manage the position, the remaining part of the position, according to what we get on the chart later on. But again, if it's not completely complying with all the time frames, know that what we're looking for, less risk, guys, always less risk. So this is an ongoing setup which we are going to follow. Now back to the Forex and the currencies. Euro-dollar, we were looking for the possible buy continuations after this pullback here. We said that we want to see one more push higher, completing a possible divergence in order to get some kind of cycle here, and we did. This time we have one leg divergence, which we can see on the 1 hour chart most of the times. Okay, so we had the double top, one more push higher, completing the 4 hour chart divergence, and we're now seeing the continuation lower. So in my opinion, we should be seeing at least some short-term pullbacks towards this level here, and that's the 113.2030 zone approximately right here. Quick reminder, we are still trading inside the daily range. The last time we saw the price at the bottom, and that means we can be now looking at the price going towards the top, right? But this setup is more or less fantastic so far. Why? Because we have the inner trend line, which is acting as hidden resistance for us at that stage. And now with the 4 hour chart cycle, everything comes together to a place where we want to see a possible pullback. And when you think about it, that would be, of course, from the daily chart, inner cycle, pullbacks and continuation, which fits perfectly with the idea of range trading here. Hidden divergence already started forming and developing, so let's see how deep that thing could go. And if we manage not to break below this low with momentum, I believe we're going to see continuations up during the following week. Cable is the next one. This pair did pay multiple times very good, starting from the previous weeks, of course, with the pullback and the continuations. Basically, every drop we had on the way was an opportunity for us to look for the buys. We said that this is the zone we want to see, and the reason for that is two cycles meeting at the same point. And when you have daily cycle plus 4 hour chart cycle and daily divergence forming on the way, it means that now we're ready to see these pullbacks. Back to the 4 hour chart, no divergence, and that means short-term pullbacks. Hidden divergence already started forming, so this pair at that stage is following our plan, which is wait for the pullbacks and then looking to buy once again for continuation to the up side, and this is more or less the next level that we want to focus afterwards. Okay, so let's see, level number one, since this is daily divergence here, if it completes itself, of course, let's just zoom in and see the bars. As you can see, today is Friday. This bar, if it provides the divergence, then it will put again the bearish pressure. So level number one, level number two, and then the continuation that we're looking for. Dollar yen, that was one of the pairs which we were following for aggressive setups, dropping down to the 1 hour chart. That was the aggressive breakout, that was the conservative breakout, aggressive breakout, pushed up, stop was cleared, so this trade did fail. Now, since we're moving inside daily or weekly range here, last direction was down, last touch point was down. Again, we can expect to see the top of this zone reached, which means no more sales at that stage, for me at least, and I'll be waiting for the next possible setup to be delivered. After the breakout, at that stage, we can be looking for possible buy opportunities. The problem is we have bearish momentum, bearish pressure from the higher time frames, and that's why the buys are not very attractive in my opinion, because we have price action and indicators showing different things, controversial, and this is not where I would like to be involved. Euro yen never managed to provide us with the setup that we were looking for. That was the trend line. We were expecting to see a stop around this zone and then continuation lower. First level we were waiting for was this one, never broke below it. Then we had the double top here with divergence, which meant for us we need to move the breakout level slightly higher to the next swing. Tiny pullback continuation, and that's the beauty of trading and applying the range theory, guys. And if you still didn't watch this webinar, please go ahead and watch it, because it's going to save you from many losers. So what's the idea? We said, all right, double top, as long as there are no breakouts, we wait for the next zone, which was right here, that place, right? The trend line of the 4-hour chart range, or the channel, or the flag, together with 161.8. That zone was reached, but you can see here that the divergence is gone. We had false convergence, but this is clearly a momentum. And now a breakout. So there you go. No losers. We just have invalidation, and this is the end for the sells when it comes to Euro yen, at least for me. Definitely clear breakout. Now, why this breakout here was not good idea for the buys, because you might say, okay, but we broke the trend line. Pullbacks, why are you not buying? Because that breakout came with divergence. All right, so no need to go ahead and risk here this kind of setups. Then what do we have? Euro pound, beautiful breakout, daily divergence forming. 4-hour chart is showing us perfect setup for continuation. 1-hour chart is already under divergence. Everything comes down to the point where we want to see pullbacks and continuations. The higher the pullbacks go, and that would be my ideal zone here, the better. That would be the place where I would like to see this thing continuing lower. Okay, this cycle is very likely to provide us with an extended leg, because if that would be really and indeed the breakout we're waiting for, this zone would probably hold, which means we're going to see extended middle leg, pullback, and then one more push lower in order to complete something bigger. Then the big pullback should be coming towards this zone approximately, and then continuation lower. Okay, because technically speaking, if we apply the cycles theory, we should be seeing the price somewhere around this zone, and that would mean we're going to be back inside the channel. Possible, definitely, but let's not exclude the possibility of extended leg and continuation. And how do we know which one is going to happen? Answer is we don't. That's why we have methods and strategies to apply on the 4-hour chart and the 1-hour charts, and this is where we can look for the actual entries. Is this thing good for short-term pullbacks trading? Up to you. Yes, technically speaking, we do have around at least 100 points, maybe even more, for this corrective cycle. But at that stage, I don't see any momentum, okay, for these longer term trades. And again, it's corrective cycles, so automatically that becomes aggressive trade here. Okay, then we have pound yen. Well, basically all the pounds are extremely bullish. Pretty much same idea applies everywhere. Now the level that I'm following here is right here, guys. All right, this is the 61.8 of daily and 161.8 of the 4-hour chart cycle. I would expect the inner cycle here to provide something like this, triple wave or an extended wave into legs. Either or, there is still no divergence on the MAs, there is divergence on the histogram. 1-hour chart is already forming false break number 1 and possible false break number 2 with false convergence. So what's the plan? The plan is wait for pullbacks that you can join for the buys. If we go straight up, like the price starts crawling here without any major pullback, something like this, continuing divergence are going to be formed, okay? And then we're probably going to see very sharp moves to the downside. Alternatively, if we see pullbacks now, we should be seeing something like that again, possible triple cycle. All right, so the idea remains buy up to this place, and once we reach that zone, then the short-term sells could be a very good possibility. Okay, contrary to Europe mount. Then we go forward to dollar franc. That was something not very interesting enough to follow. It was a range, 4-hour chart range, and we said that we're looking for possibilities to sell the top or breakouts, pullbacks, and continuations. Why this setup became aggressive, or I should actually say not really tradable, because the breakout happened without momentum, okay, with bullish pressure. And I told you guys, even though we saw the push and continuation to the downside, be careful about the 1-hour chart divergence, possible divergence, which might be happening here, which in fact was broken, but going against possible second false break, not my thing, all right? Simply not, not conservative enough. And you see that in such mixed situations, mixed signals from the different time frames, we don't have anything against, and boom, the price is suddenly spiking up immediately. All right, so the market is telling you when these things are very likely to happen, and once you start reading those signs, I'm pretty sure that you start ignoring them as well. So if anyone enjoyed these positions, well done. I personally skipped it on purpose, again, too aggressive for my taste. Pound franc, this one remains bullish in the longer term, bearish in the shorter term. Here we have the divergence completed on the daily chart. The level was not yet reached. We're still missing 50 points, but on the 1-hour chart, we had first divergence already. So this is again, of course, aggressive. That consolidation is not ideal place for us to measure the convergence, but it's still lower lows coming after divergence. So short term, we can expect to see deeper pullbacks here and then continuation. Now, one thing we need to pay attention to, of course, is the 4-hour chart hidden divergence, which once we break below this low will be confirmed. So that could stop here, that could stop here. I really have no clue, or it could even break the divergence and create one more low, right? So something like that. But the idea is once we break here, it would be a good idea to cash out, or at least put the stop loss to break even and protect this investment if you're already in a trade. If you're waiting for pullbacks to join the buys, that also works fine. Okay, again, the lower we go, the better. That's the previous high, that's the high before that, pretty close to each other, and that zone, as you can see, meets perfectly the trend line. So let's see. Then we have, what do we have? Franc yen. This trade also failed because we were looking for breakouts from the top. We had a fantastic level range, 1 hour chart divergence, 4 hour chart divergence, this one, and then with the break below here, we were looking for possible, well, you can attack at that stage if the risk reward is fine with you, right? Or you can wait for tiny pullbacks and continuations. We're not going to get into the details and deeper analysis on how to actually enter. Let's just put it to the place where we got stopped out, and that's what it matters at the end of the day, right? Because micromanagement differs from trader to trader, and it will be hard to explain, especially with the guys who are not part of the club. So basically, stop out, and we have now breakout, which means possible continuation to the upside is now forming. Again, we have the hidden divergence pushing here, and we do have a double wave that we're following. And now, since the breakout happened, 61.8 is the next level we can be expecting to see here in franc yen. Then we have, where is my list? Franc yen, CAD yen. Well, we were looking for the same setup in CAD yen, but we never got the break below. Pretty much same idea, right? That's with the previous one. Some guys asked me about whether this is a valid entry here or not. Well, yes, in reality, it did pay some pips. Okay, it did push lower, but I can't really call that a double wave. Okay, or if you look at it like this, to say this is the divergence, then you're more or less at the middle of the range, right? So unless you wait for pullbacks to sell, but again, it's this move right here, not ideal, not clear. I don't know, for me this is a skip, as simple as that. Okay, so CAD yen, no harm done. This time here we have invalidation, and now as the price is pushing forward, we're following again the double wave. A reminder that we have the weekly divergence against us, so pushing upwards is something that we might be expecting. And of course, the big picture from monthly and weekly charts is the structure here, the triangle. So going towards the 90 round number, psychological number, would be something for us to anticipate, especially now that we are seeing these breakouts and the momentum being formed. All right, that's about the CAD yen. Euro CAD, pound CAD, by the way, was a very good divergence entry, guys. Okay, we're following this ranging idea for sales, which was more or less invalidated with the breakout. Then we got the push up. Okay, I know some people were involved in the buys. Well done, well done. Now, after the two false breaks and the two divergences, we can expect to see pullbacks. And those pullbacks should be bringing the price back to this zone approximately. Okay, this is some sort of wave here, double wave, that we can see on the 4-hour chart clearly. There is nothing against us stopping this cycle, so pullbacks and possible continuations to the upside. And of course, this is the structure on the daily chart which we're following, double top now with the divergence, so short-term pullbacks definitely in play. Okay, and then possibly continuing higher. EuroCAD was another interesting opportunity for us. Daily channel, we went lower towards the bottom, and this is where we started looking for the possible buys since we reached more or less the bottom of it. Okay, we had two plans. Plan number one was for the price to push to the absolute bottom, which it did not, at least not yet. This is where the divergence was formed, and we said aggressive entry or possibilities for entries would be with the breakout here. We got the 50% correction. This one I personally attacked with pending order as I was not around the PC. Cashed out towards the top. Why? Because here we got double top with divergence. Okay, very sweet entry, provided some pips to the upside and get out immediately as we had seance against. Now it would be interesting, very, very interesting actually, if the price manages to push and clear the stops, because many people were already involved because of this breakout and the trend line breakout, and their protection is right here. So clearing that zone once again, pushing the price towards 148 could be a fantastic opportunity for us to look for the next buy. And on daily chart, we can see that the bullish pressure is there. Everything looks super sweet. So let's follow up next week probably. And if we get 148, it would be absolutely great. That's about your Aussie dollar. That was another very interesting opportunity. I'm going to just analyze the short term, okay, the lower time frames. Push down, convergence, divergence, reversal pattern, flag, breakout, same convergence, divergence idea with closing below, pullbacks looking for continuation down, trend line on the way, invalidation level, the spike above. This is where the price managed to create the hidden divergence right here, okay, on this spike. Then we started following for possible push to the upside, okay, in order to complete MA's divergence. We did. Beautiful false break created on this trend line. This is where we said we have two options: 15-minute chart aggressive attacks, 1-hour chart conservative attacks, and that's where the 15-minute chart managed to deliver this entry. And then we had the 1-hour chart here with the breakout and the flat consolidation, where we said we're looking for breakout of this thing and continuation lower. Both of them paid very nice already. Since we're near the previous low, the swing, and this is a fantastic support zone here, time to cash out, possible pullbacks on the way. Nothing is stopping us at that stage. I believe we're going to see another push lower and very possibly continuation to the downside. So Aussie dollar sells paid very, very nice. Aussie franc was another pair which paid. Since the breakout here, guys, we said we're looking for pullbacks and continuations. We had some opportunities here, but let's focus on the current situation. Since we moved the invalidation zone to this spike, pretty similar idea as with the Aussie dollar, okay? We had here the false breaks on the top, 15-minute chart, etc., etc. We also had a breakout, same idea on the 1-hour chart. However, here the risk reward didn't make too much sense, right? It's only 1-to-1. So pullbacks is something we should be looking for. Well, at least for me, that makes much more sense. And as we can see, the pullback was delivered. So just think about it. Even if it's 38.2, that's 50 versus 73 already, right? It's 1 to 1.5, much better. If you go to 50, not 38, then things start to become even better. So always be patient. The worst thing that could happen, well, not the worst thing could be stop loss, of course. But if the momentum is too strong, you're just going to miss that move. So what? Okay, next opportunity will come. We're dealing with 15-minute, 1-hour, 4-hour chart on daily most of the time. That means plenty of trading opportunities during the week. Believe me, guys, you just need one very clear setup, the best setup you can pick during the week, and go with that. With good risk-reward ratio, good money management, you can be making 2, 3, 4, 5% with 1 or 2 trades, right? So no need to force things out. Next one was Kiwi franc, and well, here we have the higher time frame trend lines and all the things we said before. The interesting part is the shorter term daily, where we have a range. okay, with triple top more or less, and this is where we said we are looking for the sells. We just remove those previous analysis here. So going back to the 1 hour chart, now this setup looks much better in terms of risk reward ratio, right? Even conservative protection, because the top is the bottom is much lower. So Kiwi franc provided fantastic sell opportunity, already paid, and money is in the pocket. We are now building hidden divergence on the 1 hour chart, which means possible continuation to the downside. But the one thing we should also mention is that this is a possible ascending triangle, right? And we were talking about this previously during the week, and you can see where the price is bouncing off of at the moment. So these pullbacks and continuations are going to be aggressive immediately. Why? Because we can expect to see now the price towards the top, and this hidden divergence on the 1 hour chart will be much more aggressive entry. Okay. Then we move forward. Let's see, Aussie pound cat, Aussie franc QE, Aussie yen. Aussie yen provided an interesting short-term opportunity, triple top, okay, divergence on the last part, 15-minute chart, impulsive leg right here, pullbacks towards the 50%, and we got the profits immediately, right? So at that stage, I really don't care what is going to happen. Based on the other yen pairs, we're probably going to see breakout and continuation to the upside. And we now need to adjust this thing. So assuming that this is the daily chart cycle, this is probably what we're going to see. But this kind of ranging situations, I'm talking about the buys, not so clear, guys. Okay, so I'm still holding my breath and not attacking the buys here. Then what do we have? Aussie yen. Well, Aussie cat. We were discussing this flag yesterday. I think Eric was posted it in the group. So thank you, Mike, for pointing us to this direction. Fantastic move down, beautiful flag, immediate continuation. Okay, so in just a few hours we made very nice profits. Kiwi cat was another interesting opportunity, which another trader of our team pointed out. That was Kiwi cat idea. Well, same situation, right? So we got the continuation here as well. Then we have Euros, which is still stuck inside the range. Weekly pressure with the last divergence here is bearish. We have the weekly range, which is also telling us bearish. So the 4-hour chart range is actually an ideal situation for us to look for possible sells. Divergence on the histogram in place. A 1-hour chart created something which now this is a forced trade. When we say forced, this is forced. We don't have an actual double top or spike, but we do have the divergence. So break below would be an aggressive entry for the sales, but the risk reward in this case is good. So we can allow ourselves to go, let's say, with a quarter of our initial investments and attack this thing. Or alternatively, if we see a double wave here, so something like that, one more push, clearing stops, completing an actual beautiful divergence here, well, then this is going to be attack number 2. And again, looking for the sells. So if you want to be more conservative, you can wait for this zone to be reached and only then start looking for the attacks and breakouts. Or if you're afraid to miss the move, just attack it with very tiny lot size, and if this thing continues, you make money. Or simply protect here slightly higher, not the last high. Okay, and you'll have an idea what's going to happen. The problem is, if we're going to protect slightly higher, This is where the 100 zone is of this cycle. Okay, and if we try to get here a magnet zone, let's see what we get, to 61.8. So technically speaking, that zone could be cleared with one more push higher. Okay, so in my opinion, there is no need to put the stop loss here, because then, well, yeah, the risk reward would be still acceptable. We have more than 1 to 1.5, let's say. But as an alternative, we can just accept a tiny loss and then look for possible next entry. Pound Aussie was another fantastic opportunity which we got. Basically, we're trading inside this 4-hour chart channel here. So after the breakouts and the continuation to the upside, we've been enjoying these buys all the way up. All right, that was this week's opportunity with the breakouts here. Immediate continuation up. First false break is now in place. So break below here would probably mean we're going to see short-term pullbacks, or maybe even something which will bring us towards the bottom. Or as long as this one is not broken, I won't be surprised if we see another push, second false break to be delivered, and only then the actual deeper pullback to the downside. Did you cover Euro Pound already? If you did, I'll get on the replay. Yes, Charles, thank you for that. We did cover it in the beginning, so please watch the recording. What else do we have? Let's see. Silver finally managed to break below this trend line here. 2 false breaks, bullish cycle to the upside. Okay, multiple false breaks with divergences, and now we are finally breaking below. So sell, 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 at least in the short term, and then we're going to switch to buys very likely. Gold, another thing that we were following for the potential sells. We got the breakout here, we got the tiny pullback which allowed us to make the profits. Okay, so again, patience always delivers, guys. This is the pullback I'm referring to right here. Breakout zone, immediate push to the downside, breaking the previous lows, tiny pullback towards the breakout and continuation. Now, yesterday I told you I'm neutral during this thing and not looking to rejoin the sells, okay, even though there was a hidden divergence and so on, for one reason only. There was already a double wave and divergence. All right, so technically speaking, we could have easily continued higher and create new highs. So since I already made money on this move, why would I immediately risk it and give away my profits, right? No need. Anyway, the hidden divergence and the price action here, the price managed to be blocked by this trend line. Hidden divergence. Now 15-minute chart again is another thing which I don't like as a confirmation, because this is not an ideal move even on the 15-minute chart, right? We need to drop to the 5-minute chart in order to comply with the rules of moves and so on. And even on the 15-minute, on the 5-minute chart, it's not exactly clear. But anyway, more or less was confirmed. Again, a bit forced, a bit more aggressive trade, since we're already dealing with the very, very low time frames, and that would be the setup right here, which would be paying. Again, if someone traded that, very well done, guys. I mean, the pressure definitely from daily chart is bearish, same situation, multiple false breaks, etc., etc. So we're looking here at deeper pullbacks and then possible one more last leg before we see the other major push to the downside. Oil, we were waiting for possible sells. However, we did not get anything here or here. And since 61.8 was broken, and technically speaking, that was the zone, right? Not 61.8. This range, sorry, the previous range. And once the price cleared it and broke the divergence as well, that was the time for us to say game over, no mas. And now we're back to the top, so let's see what will happen next week. And that's actually all, guys. Any questions you might have now would be the question. Now would be the time. Sorry. No, Roland. I only covered FTSE UK 100 here, and this is currently the only thing I'm following. So that would be more or less all for the indices. Andre, this is a very complicated question. And are you talking about long term or short term about oil? Because the longer term means we're still not covering the cycle, and in my opinion, daily cycle should be pushing the price towards 60. So that's why only conservative sell setups, and since on the 4-hour chart we covered this earlier, right, in the LTRs, this is only aggressive setup here. Yes, it's 4-hour chart, we have the reversals, but you can see what happens because daily chart is not yet ready. So in my opinion, we're going to see continuation towards 60. All right. You're welcome, guys. Perfect. So wishing you fantastic weekend. Okay, and I'm going to see you next week. Bye for now.